I was once asked how I got into the real estate business, and it was quite a hard question to answer. In my case, it was necessity. Having very little money to invest in real estate, but being a very practical-minded person, I was able to purchase houses at relatively low prices and make sense of the market, so that I could sell these on and make a handsome profit. What I learned on the journey was very interesting. It isn't just a case of speculating to accumulate. You do need to know what you are looking for, and you also need to know what it will cost you to make the home that you have bought fit a specific market. You also need to learn when to walk away, and that's the hard point that some people who invest in real estate don't watch for. This can be the difference between making money and losing your investment. In this video, I will use my personal experience to explain how you can make your experience as a home buyer or as a potential house flipper successful. You will learn all about buying houses at bargain prices, about the study that you need to put into the market, and how this study pays off long term. It isn't as simple as buying a house and doing it up. The real estate industry is much more complex than that. You have to bear in mind the state of the market, the area of the market that you are competing in, the cost of refurbishment, and the overall length of time that you will have your money tied up in property. With the right attitude and the right way of approaching the real estate market, it can be a very profitable and worthwhile way to make money. Without the expertise and without taking precautions, it can be a disaster. This video will help you to understand how it all works and what you can do to ensure that your real estate gives you the best return. You will learn all about what to look for in a new property so that you avoid some of the more common pitfalls. Here are the most real estate basics to consider. You enter the real estate marketplace the moment that you buy your first home. To purchase that house, you need to have set your finances up to be able to pay your current bills as well as any bills that are incurred at the new location. During the time that you own the property, whether you are buying it to flip or to live in, you are responsible for the utilities and all taxes related to that house. Make sure you look around the market before buying. You want to have a comparison before making an offer. That means that you can weigh up one investment against another. Some people with less money to invest may choose to opt for a house that needs repairs over a longer period of time. The fact that the house is in a bad state of repair will mean that the price on the market will have been relatively lower, but the trick is working out what the home would be worth once all of these repairs are done and what the cost of those repairs is likely to come to. Equity is the amount of money that a property gives you as the potential for another loan on a property. If your property was bought for $100,000 and is currently worth $150,000, then you have an equity of $50,000, or you may find that your lender would be happy to advance that amount, depending upon how convinced the lender is that the value of the property would be reached should you default on your payments. There are different scales that you need to remember as well. The market value may differ from a valuation of the home for bank purposes because all a bank wants to know is if they will get their money back. The market value, however, may be something that is flexible depending upon changes in the market. For example, if there are not many houses for sale, then the house is more valuable because it's a rarity and something that people will be looking for. If there is a housing surplus and there are too many choices, then it is likely that it's a buyer's market and you may get less for your house. The other valuation you need to keep in mind is the valuation for insurance purposes is totally different from the previous types of valuation. This should be based on what it would cost you to replace the house in the event of it being destroyed. An insurance company will be able to give you a valuation so that you know what insurance is likely to cost you. In real estate, you have different types of sales. Short sales are when you can buy a property at less than the amount that the seller owes to the bank. In a case like this, the bank may have given up on ever getting back the amount owed and may agree that the seller can sell to pay off as much as the house is likely to realize. The problem with short sale prices is that they don't always turn out to be as wonderful of a house as the purchasers think it will be. There may be repairs needed that are excessive, but purchasers jump in blindly because they feel like they are getting a great bargain. A home inspection costs money, but it doesn't cost as much as the potential loss that you can make if you buy a short sale property that needs more care than it's worth. Auction properties. These are usually properties which have been foreclosed on. The existing owner cannot afford to pay the mortgage and the bank wants back the money that is owed. Now these can be a real bargain if you know what damage needs repairing and you are aware of the market. We will go into this later, but basically these are houses the bank is prepared to sell for the amount owed on a specific date. The advantage of these sales is that you can get bargains. The disadvantage is that you need to have inspected the property in a short space of time and should have the financing in place before you bid. The mistake that people make with this kind of purchase is that they bid above their budget and leave less money for repairs. Sales through real estate agents. These are houses that have been put on the market for a variety of reasons. Perhaps the owners are moving to a new town. Perhaps they are simply moving to a larger home. In the case of seniors, these seniors may be moving into assisted living and don't need a large home anymore. There can be all kinds of reasons a house comes onto the market. The advantage of this kind of sale is that you can usually find out the background of the house and have more time in which to investigate and decide upon the value of the home. You also have more bargaining power because the real estate agent will act as a liaison between you and the seller. For a rental investment, the disadvantage is that it ties up your initial money, and unless you have more money for your next investment, this may not be a good move. However, if you have excess cash to invest, you may find that you will be able to recoup any mortgage payments from tenants, which means that the investment pays for itself over a period of time. This is also most important, deciding on your budget. When you enter the real estate market, you need to know how much you can afford to spend. This should include the cost of the home as well as the legal fees, agents' fees, sufficient money to renovate the house as needed and put it back onto the market. During the time that you own the house, it will gain no income and will be a liability. Therefore, your budget must include a fixed period of time where you will be expected to pay the mortgage while any work needed is being completed. People often forget about this aspect of cost, but every month that you own the house will cost you money and should be counted. When you are deciding upon your budget, bear in mind what the bank is prepared to offer you and what this will cost you during the time that you own the property. You also need to ensure that you can afford homeowners insurance for the period that you own the property and know what taxes apply to your ownership. You must have a definite cap on what you can afford to spend because this allows you to only look at houses which fall into your price range and a little higher. Bearing in mind that there is always room for negotiation, it helps to be able to get a contractor to give you initial quotes on the cost to do any repairs on the property. Remodeling can be expensive, but necessary to raise the value of the home or to repair items in the home that need to be in good working order. Depending on the work that needs to be done, you may need to consult with plumbers, electricians, or just general contractors to get the best quotes and ideas for renovations. I would say to anyone who wants to get into this business that you need to be fairly aware of what average repairs cost. For example, I have a list of current costs that I refer to when looking at new properties. The cost of rewiring a basic 3-bedroomed house, the cost of rewiring a 2-bedroomed apartment, the cost of installing a kitchen into X amount of square feet, the cost of replacing guttering, the cost of replacing slip shingle or tile, the cost of installing a subfloor over X amount of square feet, the cost of removing asbestos, the cost of getting rid of mold over a set amount of square feet. Before you even think of stepping foot into a house, have a folder put together with realistic costs that are hypothetical, but which give you an idea of what you are looking at. The kinds of jobs that you will be able to use unskilled labor for are the initial ripping out of old items from the property and making it ready for contractors. You will need to know what day rate someone charges because often this kind of work is done on a day rate. However, be careful. Make sure that your idea of a day is the same as theirs. Other costs that will come into the picture are things such as dumpsters. In the initial stages of ownership, these will save you a lot of time, and you need to know of a local company who can deliver one on a fast turnaround and remove it when you need it, and the cost for such work. Other ways that you can cut down on your budget is to set up accounts at your local stores so that you are eligible for discounts for supplies, lumber, fixtures, and other renovation needs. This will help you to save money. Builders' stores that sell drywall and all of the items needed for the refurbishment should be able to offer you a credit account. This allows you to budget for the expenses rather than have sticker shock at the cost of supplies per trip. Be informed you may find that some improvements to houses will be eligible for grants, and you need to be aware of this since working within the guidelines given can save you a lot of money. Find out if this only applies to your principal residence or whether grants are available for houses that you intend to sell. You also need to know from an accountant or someone who is qualified to tell you what capital gains tax applies to houses. These rules will help you to work out what your budget is and what you are likely to make from a house. That is it for now. Please subscribe to this channel and turn on the notification. You will be getting my videos every week.